My my daughter was playing with my microphone this morning, so it's a little all over the place. Let me know if it sounds okay. 'Cause there's like these dials on the back that adjust the pickup and volume on the mic. So I have no clue what it was before. Hey Nate, let me go ahead and share my screen.
Morning, everyone. Happy Monday.
Alrighty. I did post in Telegram. I'll walk you guys through it. Um, Had a morning income trade. I still don't have a name for it. I want to call it like 60-minute income or something, Nate. But playing off that opening range in the markets, I'll walk you guys through it here. I sent out a trade. I just posted it real fast because I had to log in here. Still working out the kinks for you guys. But basically, we had the markets close above the opening 15-minute range breakout. Got the buy call signal. And we're off to the races. We'll see how it goes from here. I did do a bit more aggressive strike today, just testing it out. So I did the 599 600s. Typically, what I've been doing is the 598 600, so like a wrap order at the current price. But I went a little bit more aggressive today to see if I'll get that 50% move a little bit quicker. But overall, markets shaking off all of the weekend news. Look at Tesla, Nate. I know it's a stock you've
Unbelievable.
been big time on.
Yeah. Seems like the robo-taxi thing is another catalyst. And I mean, Tesla continues to power on. We talked about this going all the way back. I don't know when we had that big roundtable now 2 months ago. And talked about how good of a risk reward opportunity Tesla was. And now it's well on its way there. I think our initial roundtable trades are up a couple 100%. I think the other portfolio we built was, you know, what, a 220% kind of trade. So lots of different opportunities on Tesla, and it has continued to find ways and catalysts to move up even after that pretty ugly shakeout a couple weeks ago.
Wow. David got into Tesla this morning at 335. Woo, that's nice. If you don't see XSP in your brokerage, some of the brokerages are different. You have to do like dollar sign XSP or period XSP. Just you can just Google it, Colleen, and it should show you the ticker that you need to type in. But yeah, the oh my word, we are just going higher and higher. Love it. Um, Couple things I wanted to show you guys today. Nate, I don't know, do you have anything you want to?
Uh, I You can run with it. I was going to say the the biggest takeaway for me today, personally, so far. I mean, and we'll see how the day shakes out. I would at least wait, for the end of the day just to kind of see if we get any kind of shake back out. But to me, I think the biggest takeaway here is just how resilient this market is and how much of a bullish sentiment we're in right now. It seems to be kind of shaking everything off and wanting to go up, finding catalysts and reasons to go up, and then shaking off fear and reasons to go down. I was relatively bullish, even when the news first started breaking out. So like on Friday, I was saying, hey, I don't necessarily think the Middle Eastern escalation is going to impact the markets a whole lot. I think, a lot of it was somewhat expected. We can more easily price it in, not affecting US markets. So I don't think it's going to affect us all that much. Then I saw Bitcoin crater and I thought, okay, well, never mind. Now we're going to see the market, now we're leading the market. And I thought we were going to open down 1.5% today. Turns out we opened flat and are now up. So to me, I would say the biggest thing that I take away from this is that this market is still looking really strong and wants to move toward all-time highs when even, international conflict in the U.S. getting involved doesn't really move us off that pace.
Yeah, it was crazy. So here's Bitcoin. You can see it over the weekend. Um, this was before the US. The US's bombing was someone here, and then popped up from there. But yeah, it took like a three, actually like about a 5% bath from the where it was, but it's rebounded a bit. Here's the S&P. I just pulled the SPY, but it's going to mimic what the futures did. Big gap down on the open. Not even, I guess not even that big. I shouldn't
Not
say
even that big. Not even
big
that
would
big.
be like 2%. This was like a 0.5%, and then filled the gap from there. And if you're looking at the markets now, I mean, looking really, really strong
Yeah.
at the open.
So I actually think Bitcoin's now a buying opportunity. Again,
Okay.
it's like it's one of those things. I mean, Bitcoin has been my best asset for the last year and a half, or whatever, and in the last month or so has kicked me in the teeth a couple of times. But now, if we are kind of risk back on aggressive, which I think it certainly feels like we are, then it feels like the flush on Bitcoin was a little bit overdone, and it's going to bounce back up 103, 104. Although it's up 102.6 already. So we've already got a little bit of juice back into Bitcoin. So it's amazing how quickly things flip. But I guess for me, guys, I'm just going to say it one more time. I'm sure you are sick of hearing me say it. This is really why I am not trading a lot of these timing entries right now. I'm doing more of those defensive trades. Something even like Bitcoin that flushes down 4%, but then bounces 2%, still puts you in a position to win. The rest of the market that gets jittery the last couple of weeks, and if you look at the weekly chart on the SPY the last couple of weeks, they look a little toppy. They look a little red. Well, they are red, but they're really not in any danger of actually flushing out those more defensive trades, even as the market has, gotten a little hectic and random. And so for me, the income machine is still really the way that I'm approaching the market right now, trying to get more in those defensive positions, give the market some room for error. Obviously, on the portfolio side, I'm still fairly aggressive, holding all my positions, all that sort of stuff. But I really like the opportunities right now where you can kind of get in safe, slide underneath, underneath where the market is, and give yourself room. Yeah, I lost about 8,500 bucks on Bitcoin in the last month after being on a real hot streak. But amazingly, on Friday, I actually the income machine, the one income machine IBIT trade, I still got out with the win. So income machine win rate has been pretty amazing. But on some of my other more aggressive Bitcoin trades, yes, trading IBIT. My actual Bitcoin, I haven't touched in years, but on the IBIT side.
We did have some question about the XSP trade. I did throw it in Telegram just before hopping on here. I'll post my Telegram link here if you don't have it. Nate, I think today's a record. We just hit the target in let me do the counting. 10, 12 minutes. Hit the target in 12 minutes. This is normally about a 90-minute trade. Normally about a 90-minute trade to hit our 50% target on average. We just hit it in 12 minutes. So hopefully you guys got that. If not, click that link in the chat to join Telegram. I just threw a screenshot in there as fast as I could this morning before hopping on here. Let me walk you guys through this strategy really quick, just a basic overview so you have an idea of what I'm talking about. Obviously, you can see here there's an opening range that we care about. And if the markets break above or below it, that's when we would enter. We don't enter somewhere in between. We have to get a close above to go long, close below to go short. Now this, I'll just walk you through it and then I'll show you a couple examples here. So if you look at the math or the data and the historical odds of the opening range predicting the market movement, they're pretty good. So if you look at the first, this is a 30-minute candle. When the markets go above the 30-minute opening candle high and low, 75% of the time they finish higher that day, or 76% if you round up. So when we get an opening range breakout where that first candle sets the range and then we break above that first 30 minutes, typically the markets finish higher that day. And same can be said for the inverse. If we get that opening range and markets close below that 30-minute range, typically they go lower from there. So what I've been doing, and I'm actually getting a better win rate than that, but I'm using the 0 DTE, the 0 days till expiration options to target about 50% before noon typically. Like I said, it's normally about a 90-minute trade, 60 to 90 minutes on average. This morning was 12 minutes to hit our target. But ideally, we want to hit that 50% payout, little income opportunity before noon. But if we don't hit it by noon, that's okay. And I'll show you an example because we still have that full day to hit that target. And yes, this is an automated target. So once we get the entry, You would have, I pick the options, I get the entry, and I know my exit immediately, set it all at once, and I'm done. So, for example, I just got filled here a couple minutes ago when we were on here. I was not clicking any buttons. I just heard my thing go ding, looked over, and I filled on my close order on XSP. So the entry window for this trade is we let that first 15 minutes set up. So the market's open at 9:30. This little thing you see here is the first 15 minutes. So this is a 5-minute bar, 5-minute bars. First 15 minutes sets our range. We want to see the high of the range and the low of the range. So that's what these lines mean. Does everyone see that? We don't care where the candles open or close per se for the first 15 minutes. We just want to see the highest price and lowest price to set that range, knowing that when price breaks out of that range in one way or the other, typically we get a continuation pattern. So here we broke above it, continuation pattern. When we break below it, continuation pattern. And it's not, we're not trying to guess the next 3 days, the next week. We're just trying to guess pretty much the next hour or two. And typically from that opening bell through about 11 a.m., you get the continuation in one direction or the other. So our entry window stops hard at 10:30. If we get a day, let me see if I can go back a little further. See if this will work. 5 minute. Let's see one that didn't have an entry. So here we go. Here's an example. You could have gone long here, maybe made some money, maybe not. But look, notice here, first 15-minute range sets up. So we have the high and the low for our range. But by 10:30, the price never closed outside the range. It got close, but it never closed outside the range. That's not a clear signal for us. We want a very clear signal that we're closing outside of that opening range in one direction or the other, and then we take a trade. So if we don't get that by 10:30, we just don't rush in. Again, here's another example. Never closed outside the range. No entry. Look, the market's finished flat. There was no directional bias at the open. Versus here, actually, let me do my next explanation, and then I'll show you this one. So that's our entry window. We let the first 15 minutes tell us what we're going to do. It gives us the prices. Actually, 15 minutes in, we already know the strikes we would be taking long or to the downside. And then we just wait for a close outside the range. If we get to 10:30 a.m. and we haven't had that close outside the range, we just pass and come back the next day. Now, we always want to set around 50% target with our entry. So if we're entering for 50 cents, our target would be about 75 cents. If we're entering for 40 cents, our target would be about 60 cents. Does that make sense? D is asking, how would you know the strikes? So here, once we have our first 15 minutes in, we know our low strike is going to be probably 596, 597, or 596, 595. And our high strike would be, it's 599 here, so probably 598, 600. Basically wrapping those ranges. Now, I'm not placing both trades. I would wait for it to close below outside the range or above outside the range. But that's how we know our strikes immediately in the first 15 minutes. Now, over the weekend, I had some fun. And I apologize, my voice, all the kids here in the neighborhood are coughing, so I apparently got a little something, but hanging in there. This is over the last 2 years, so you can see since 2023. This is a cool little options backtesting tool. Using this strategy, opening trades between 9:45 and 10:30, based on that opening range breakout, 83% win rate, and that's using that 50% profit target. You can see the compound annual growth, 105%, pretty crazy. This is the last 2 years of data. Now you might say the markets have been up the last 2 years, so maybe it is, it's better to trade it then. Well, I actually ran it all the way back since the inception of the SPX, which was, 2013 or 2011. 82.9% win rate since the inception of SPX, which includes the COVID crash, 2022 bear market, all that sort of jazz. So it's been very, very steady. We ran tests on it. We've been testing it this year, and I don't want to make up a number for you. Let me get the real number. Since we started tracking this in February, 81.5% win rate. So always right about that range, 83, 82. We're probably 82% now with the last 2 wins we've had. So that's just to show you the power of this trade. It's not something that's going to win 99% of the time, but it's also not something that wins 60% of the time. We're getting 50% payouts about 80% of the time. And last week was a perfect example of that. You can see the last 5 days here, nailed it. Buy puts, made money to the downside. Buy calls, made money to the upside. This one lost. Buy calls, It never got high enough. That's okay. Buy calls, hit the target, and even closed above it. Buy puts, and this is what I want to show you. It didn't hit the target immediately, so we didn't get paid before noon. This is one of those rarer scenarios, but by the close, it ended up hitting the target. So here you can see 80% win rate just this over the last 5 days. Add in today's, we're doing a little bit better. Now I know I'm flying fast. Does this make sense so far? Jason, is this profit? This was based on the last 2 years, so it's just since 2023. I didn't take the screenshot of this one. I just pulled the win rate. I just did a bunch of different time frames to pull the win rate and just to make sure that it was good through all time frames, not just works in some and not in others. This was just over 2 years, and that's using 20% allocations. You can maneuver these numbers however you want, but that's just 2 years. Exactly, Jason. So let me show you an example of what I mean by this. We want to use zero DT options, target about 50% before noon, but we also have the full day if we don't get it by noon with the automated target. So here was that example I just pulled up, right? We have the opening range 15-minute here, high and low. We get a breakdown. Typically, and I've showed you a half dozen examples, typically we see a continuation lower for the next hour or so. That did not happen on June 5th and went higher, which might give a little scare. But even though we didn't hit our target by noon, because we're not, exiting early or anything, we had the full day for it to continue that pattern lower, in which case it hit the profit target probably right in here. I don't have the exact numbers in front of me. Actually, I do. I don't see the exit time though posted, but it would hit it right about here before the close, and you make your 50% target. And again, you didn't have to monitor this or anything like that. But typically, what we like to see, I'll just pick some random days, buy calls, continuation higher, right? Buy puts, continuation lower. So like here's a good example. And let me just make sure with my tracker, this was a winner, right? This doesn't look like a winner, right? It says buy puts, it went higher. But on June 2nd, you would have entered the 588, 589 at 53 cents and hit your target right about here. You would have been done for the day, out by 10 a.m. Didn't matter what happened the rest of the day. We just really want to focus on that opening breakout continuation pattern. Buy puts, markets flush out, right? Buy puts, flush out. Buy calls, continue higher. So that's just a quick overview of what we're doing here. How do I set the target? I do 50% on my entry. So if my entry is 50 cents, my target would be 50% higher, which is 75 cents. If my entry was 45 cents, I'll just show you. If my entry is 45 cents, my target would be 50% higher, about 67 cents. I typically do basically what I call a wrap order, where I'm buying one below the price, selling one above the price. And normally the entry is going to be about 45 to 55 cents on that on XSP. Now, I know I breezed through this. I don't want to spend all of our day today breaking this down. We're still working through it. We're still optimizing it, wanting to find the very, very best ways to give you guys entries, exits, everything, the right strikes. We do it on XSP. You can do it on SPX. You can do it on the QQQ. Actually, look at the QQQ. It probably would have been a whopper today. Yep.
Oh, look at that thing go.
You can do it on the SPY. It even works on individual tickers, but I'm primarily, like here's Tesla today. I'm primarily focusing on the broad markets just because I know that this is the underlying edge that we have. The S&P, when it gets above that opening range, it continues higher. That's just a very normal pattern in the markets. And so we're just tightening it up a little bit to go for that 50% target where we're out normally before noon. So again, hopefully you got the trade today. It was a bit of we got to build a system here so we can just get it out to easy peasy every morning where you don't feel like you're rushing. Probably hand out the indicator too so you can have it. But that is the gist of it. And yes, hit the target in 12 minutes today. Can't complain about that. I will do this. How to review this again in detail. Russ, this will be recorded. I'll probably have a full hour session where I do this much more. I put this together in about 5 minutes before today's class just because I was so excited that we got the new entry and I wanted to show it to you guys. And we just so happened to hit the target 12 minutes later. This is not a program, Charles. This is just something I'm testing, working on. Obviously, the Diamond members will get this first. I do have an email address, Joe. It's grahamtradestocks@gmail.com. I'll just post it in here. And it's funny, I've actually had people email me in, and maybe some of you are here who've notified me when like we have a replay that's not working or a video going to the wrong link. So you guys are helpful too. But the recording should be on YouTube on our channel and in the opening playbook, $1 VIP members portal. Who here does not have the $1 VIP members portal? Anybody? You can get it for free. I mean, you can get the recording for free, but we've just put a members portal together for everything centralized in one spot for $1. Um, just a quick overview. Tomorrow, every Tuesday, I cover my market outlook. I break down everything I'm seeing in the markets, the internals, technicals, seasonals, sectors, all sorts of things. Last week, I thought the week prior that CPI was going to take us to new highs. It didn't. So I said, cooling off, not great for directional trading. This is kind of where we sit now. And then today, markets are up slightly. So we're right about back here, just chopping around. No momentum right now, no directional bias in this S&P 500. So we're just waiting for the next catalyst. Or this could just be a nice cool off consolidation period, allowing the markets to catch a breather before going higher. So the reason I say that is typically right now, I'm not looking to take big speculative positions. I want to let the market give us a direction first. But I do have a play for you guys. Nate, can you drop the $1 link? We got a couple people asking here in the chat.
Yep, I'll grab it now.
We wanted to keep it free. At the time, our team said if we wanted to do a lifetime membership, it couldn't be free. There, we had to have a charge. So we said, what's the lowest we can go? And they said $1. Perfect. So Nate will drop that in here. It's really intended to be free, and the show is always free. Wild card play I did give to you guys, and I still like it right now. PGR is up 1.2% on the day. AJG is another good one. I'll walk you through them both. Financials typically is slow in June. Now we're getting towards the end of June. You can see here the financial sector in the month of June is typically down and then has a very strong July. Well, we looked at XLF together and I said, look, XLF has already made a down move. That means if you do the math, the difference between buying at negative 1% and riding up this 1.9%, that's a 2.9% potential increase. So I just rounded it up and says that gives us about a 3% headwinds here, seasonally speaking, over the next few weeks on XLF. So then I looked at my favorite ticker in the sector just to see what it typically does seasonally. My favorite ticker is PGR, Progressive. I'll walk you through it here anyways. And I asked ChatGPT, which is pretty cool, you can do this. I said, can you pull the seasonal data for Progressive over the last 20 years on how it's done in June, July, and August? Pretty sweet. It could do it in about 30 seconds. So it said June, it typically falls about 1%, which Progressive was down. We were monitoring it closely for a breakout to the upside. Didn't get it, fell out. So we were just waiting our turn. This is typical seasonally. We have some support here at the 200-day moving average. So what happens typically in July and August? Very strong July, 1 to 3%, and very strong August, 3 to 6%. So if you look at where we are now, in my opinion, that gives us about 10% upside over the next 6 weeks on Progressive. And it's also one of my seasonal picks. PGR is the ticker. No, we're not looking to double our money here on the stock in a couple of weeks, but just a good healthy 10% in about 6 weeks, in my opinion, would be a really amazing move considering the markets might give you 10% in a year. So I like PGR right now. And I also like AJG, which is just another insurance stock that's been a really, really good one. It also took a dip. Both are up today, looking good. If you want to trade options on it, I would probably look at the 270 and 265 strikes on Progressive. If you want to wrap it, which is what I like to do, you can probably get a little bit over 100% right now if you use those two strikes, the 265 and 270. You could even go out to August on expiration, buy yourself some more time. And I fully expect progressive, not straight line like this, but to get back to about 290 in August. So there's a little freebie pick for you there. Nate, I'm out of breath. I'm losing my voice here slowly.
All right. Well, let me walk through. Speaking of stocks I like, let me walk through one on Walmart here. So this is Walmart, one of my favorite stocks, and I've been trading it pretty aggressively now for the last couple of years. And one of the things that I like about stocks like Walmart is that they have a nice combination. I would say this about Progressive as well, by the way. They have a nice combination of upside and stability. So, Walmart can be fairly defensive when the market's rough, but it can still move up pretty aggressively when the market is up. I mean, Walmart's up over 100% in the last couple of years. But still, and I mentioned this at the beginning, I'm not super aggressive right now in trading these stocks with, timing and trying to get the direction exactly right. And so that's probably the most common question I'm getting right now is, okay, what does that mean? So, for example, I could say, hey, Walmart's going up. Looks like it's going to hit all-time highs. I'm going to buy a call here. And I think that's actually a totally reasonable trade. The problem is what you have to overcome when you're buying a call like this. You have to overcome timing. You have to overcome the implied volatility. You have to overcome the cost of the option. And then what I think is really, really hard that I guess most people don't really talk about is you also have to overcome your own trade management. When do I get out, make a perfect exit, all that sort of stuff. I mean, you guys can let me know in the chat. There's 500 people here today. I'm sure everyone can relate to this. A lot of your good trades that you end up not making money on are probably more to do with the exit than anything else. I mean, give me a yes in the chat if you've missed out more opportunities or as many opportunities purely based on exit, not necessarily you're always getting direction wrong. And for me, I know that's been very common. I'm already have 100 yeses in the chat, right? So that I think is one of the things that gets really undervalued in overall trading is simply the exit part of the equation. Or even if you do have a good idea, you have a good strategy, all of that sort of stuff, then you still have to get out at the right time. And I think that's really difficult. So what I look at is something like Walmart, and then I try to find, okay, how do I get into Walmart in a way that gives me a good balance of what I call cushion? That means a room to be wrong and still win, and also ROI. So I want to get in under the current price, and I also want to have a good enough ROI. And what that requires is trading like a debit spread. You could do it as a credit spread. You could do it as a debit spread. You could set up some other fancy complicated trades, but for me, a debit spread is by far the easiest way to do that. And then look for the opportunity for it to finish above wherever you set that trade. So for example, if you set the trade down here, it needs to finish above that. If you set the trade up here, it needs to finish above that. If you set the trade up here, it needs to finish above that. Or you could even put it above the price and need it to go up and finish above that. In any one of these situations, that's where you get a win. If the price finishes above that quote unquote line in the sand, right? So that to me is a lot more systematic way to trade, a lot simpler way to trade, and certainly a more probable way to trade because I'm not trying to get timing, entry, and exit all right. I'm simply saying if the price finishes above here, I can get a win out of the trade. Now, the complication or the hard part comes in, well, which options do I select? How much time do I give it? All of that sort of stuff. And for me, that's where I was spending so much time digging through the options, trying to find an opportunity, and why I eventually built the income machine that you've heard me, talk about nonstop for the last couple of weeks and even the last couple of months. And so, just to give you an example of an income machine trade from today, here is what it looks like. It looks just like this. Okay, so this white line here represents the line in the sand that the income machine found at $92. Meaning, if Walmart finishes above $92, this trade is going to be a win. And then this yellow line represents the expiration date, which is July 11th. Okay, so it has to finish above $92 on July 11th. And this kind of creates this box of winning potential. Anything above this at this point in time is what we consider a winning trade. And what I love about this is that it means so many different scenarios give us a win. So the stock can go sideways. It can go a little bit up. It can go a lot up. It can go down a little bit. I mean, it could even flush down and then bounce back up. It can do a lot of different things. It can go up and then flush after the fact. That doesn't matter as long as it, is above it at this level. So there's just so many different ways that this becomes a winning proposition. Now, like I said, the hard part of this is not setting up a trade. You can go to any stock and set up a trade. You just got to get a little bit comfortable trading a debit spread, which I think you can learn in about 10 minutes and get pretty comfortable. The hard part is getting enough risk to reward for the trade and making it, get enough bang for your buck so that over time you can actually stack up profitable positions. And so that's really the superpower of the income machine. Yes, it finds stocks for you. Yes, it gives you all the numbers. Yes, it does a lot of cool things. But what it really does is it gives you the opportunity to trade in a way where you get enough cushion and enough bang for your buck on the trade. Let me give you an example right now on Walmart. Here's Walmart. Okay. So you can see Walmart here. Let me just zoom this in a little bit for you. Oh, there we go. So here's Walmart on the income machine.
Nate, you upgraded it so it shows the cushion percentage now?
Yeah, we've done about 11 upgrade features already on the income machines based on requests and things that I wanted.
That
And
is
this
awesome.
and this might be my single favorite one of all the upgrades we've done. So now I can look at Walmart and I can say, okay, I can trade Walmart with a 10.6% cushion. Guys, that means Walmart could go down 10% and you'll still win the trade. And I can make 11% on that, which, by the way, I think is an insane ROI for a stock like Walmart to be able to drop 10% and still make an 11% ROI. I think that's absolutely phenomenal. I shared recently on one of our master classes, it used to be back in the day that you trade these defensive income trades. And if you could even make 4 or 5% on like a credit spread, you were pretty happy. Well, now we're getting double that with a cushion that's way bigger. But maybe I want to get a little more bang for my buck. Well, I can get a 4% cushion, which again on Walmart, still pretty big, and I can make a 21% ROI. Love that trade. Or I could go more aggressive. I could still get 1% below Walmart and make a 41% ROI. So you can kind of look at these, determine which one you want. And by the way, based on whichever one you want, you click one button, it's going to spit out the exact options criteria, how it works with the risk to reward, the scenarios down here showing you risk to reward, all that stuff baked in with a single click of one button on the income machine. So pretty phenomenal. But to me, this is really how I'm looking to trade. I'm looking to trade in a way that gets me above a line the same with enough cushion that I can be wrong to some degree and still win with a tight enough expiration, whether that's 2 weeks, 4 weeks, 6 weeks, that it makes sense to use my capital in a way that's going to, what I would call recycle. So in other words, you put $1,000 on, 4 weeks later, you close that trade with $1,200. 4 weeks later, $1,300. 4 weeks later, $1,600. Whatever the case is, you're recycling enough capital over time that you have that compounding machine working for you. So to me, this is really the magic of the income machine. Now, there's one question I want to answer here because I've gotten it so many times, which is, okay, then what? I set up the trade. I love the fact that I have 4% cushion to be wrong, which is unbelievable, to still make 20+% ROI. So I put on the trade. I love it. Then what happens? Well, what's going to happen, and by the way, just for funsies, you can see that Walmart hasn't been below this level really at all in over a month. And when it has been below, it literally bounced up within the next day. So pretty cool in terms of the amount of cushion here you can make. So what actually happens if the trade gets above or stays above 92, because you have lots of cushion for it to do that by this July 11 expiration? Well, what happens is you get the full dollar of the spread. So if you buy a $91 call, buy 91C, sell 92C, your max value here is $1. That's the most that spread can ever be worth because it's 91 and 92. The spread is $1 apart. So that's the max value you can ever have on this spread. Well, what happens when it closes above this white line on July 11th is you get the $1. You get the max value. So this is really cool. This is one of the things, kind of one of the unsung heroes of trading this way, I would say, is that if it closes 1 penny above, or it closes $1 or $2 or $5 or $30 above, doesn't matter. You get the full value of the $1 spread in every single situation above that line in the sand. So you have many, many, many different ways to not just win, but to get the maximum value of that trade. So what actually happens? Well, if you pay 75 cents for this trade, when you close above here and it exercises for that full dollar, you've just made a net 25 cents because you're going to get $1 in your account. You paid 75, you get the dollar. Now you've made a net 25 cents per contract. So you've made 33%. Okay, pretty good ROI, in my opinion, for a big old cushion on a great stock like Walmart. Christian asked the question, when do you get out? You don't. You don't get out. You let it expire above $92 for the full value. And whether it expires at $92.01 or $92.50 or $93, $94, $95, or $105 does not matter. You get the full value. So this is kind of what I was saying, Christian. For me and for many people, staring at the chart, wondering when to exit is probably the hardest part of trading. Here, you set up the trade because you like the trade and you make full value. John, no, this would be a 33% ROI. You paid 75 cents, you made 25 cents. That's a 33% ROI on the trade. So to me, again, I'm just going to keep hammering this for a moment, and I'll ask any questions or I'll answer any questions you have. But for me, you could buy a $2 option here, right? And you could hope it goes straight up and maybe you'll make an extra dollar on it, 50% ROI, or it grinds a little bit up. And you could, make 220 or 230, sell it at the exact right time and make a profit. And so you could make money that way. Or what you could do is say, hey, I like how much cushion I have here. Let me put $2,500 into the trade, just as an example. I'm not telling you how much to invest in the trade, just an example. You have $2,500 invested, and all of those different situations, again, even if it dips down and goes up, so many different situations, that trade is going to pay out, what's that, about $800? So pretty good ROI there. Someone tell me what's 2,500 times 0.33? $850? I don't know. I need some mental math here. I'll pull up the calculator. Let's see how much this trade would pay on 825. All right, I said 800 and 850. I got on both sides. So $825. My mental math was fairly close on a $2,500 stake. So the question here, or at least the thought process for me, is do you want to trade in a way where you have to get timing perfectly right, implied volatility perfectly right, exits perfectly right, and on 2,500, maybe you could make $1,000. Maybe you could even make more if you timed it exactly right and you got a really big move. Or do you want to not get any of that right, not even worry about any of that, hang tight, have a nice cushion, and make $825? For me, it seems incredibly obvious for most traders, this trade is a much, much bigger advantage. I don't know about you guys, but to me, it seems obvious that for most people, that's going to be a massive advantage relative to exact right timing. Okay. And yes, of course, whatever you invest, you could lose just like any regular option. Any call option, you buy, you could lose the value of that just like any spread. You could also exit early if you want. There's lots of different things that we'll talk about in the master classes and all that sort of stuff. So the question is, to me, which one's more advantageous over the long haul? And so far, we've won 93% of the time on at least on my live money trades that I've given out. Now, this would work on whatever stock you were trading, whatever strikes you were trading, whatever scenarios you were trading, and the income machine would be the one that does all the math for you. This strategy section where it's going to show you how much cushion you have. Let me give you another example. Let's go back to the homepage and look at some of these 5 out of 5 trades like BlackRock. 5 out of 5 here, you're going to find opportunities. Same way, it's going to run through all the options criteria here. And on a stock like BLK, which isn't going to have a huge margin for movement, you're still going to find trades that have really nice cushion, like 11%, 2.3%. In this case, the aggressive one actually found a crazy one with 6% cushion. So what it's doing is it's taking that concept that I just showed you, which basically says, hey, how far below the price of a stock can we get and still have good ROI? And it does the work of bouncing through millions of options combinations to find the one that gives you that incredible balance of margin for error and ROI. Now, the reason, folks, that I didn't give you a free trade on Walmart in the chat or a free trade on BLK in the chat is because you can use the income machine. You don't need me to give you a free trade because everyone who's in here has the opportunity to do at least 30 days free using the income machine, because for the first time ever, we decided to open up the tool and let people try it for free. And so if you haven't done that, if you're in this room and you haven't at least walked through our presentation and given the income machine a try, there's absolutely no reason to at least not try it. We'll play the presentation here for you here in just a couple minutes if you like it. And then I'm sure if you want to trade with it, you'll probably have questions like, which balance do you like? Or how do you rank those stock criteria? Which one's your favorite? Or when do you decide to use the aggressive versus when do you try to use the conservative? Or what new features are in the income machine? You probably have lots of questions. Well, guess what? Tomorrow we'll have a masterclass. There's already 5 hours of masterclasses for you in the members area if you want to go through those. And yes, you get them even if you just try it for free. You still get 5 hours of my time going through it. But you probably have even more questions and thoughts and ideas and all of that. So watch the presentation, check it out, and then join the masterclass tomorrow, and we can cover all that material for you as well.